Welcome to the Infinite Wealth Podcast. Today, we're going to be answering your question on how important is the insurance company when implementing IBC.
Stay tuned.
Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Welcome to the Infinite Wealth Podcast. Like I said, today what we're going to be talking about is how important is the insurance company when implementing IBC. Anthony, I'm excited for today. How about you?
I am too, and I'm excited today because, you know what, also, I got my hair cut today.
You did.
And you know what, I know you're giving me that, not giving me a look of approval, but, you know.
It's as good as it gets.
I don't know, I think when you get your hair cut, I think you just feel good that day.
Yeah.
I mean, you probably feel that way every day, you know, but I got my hair cut, but then we also have this new lighting, which looks pretty cool, but to be honest, I'm not digging the way that I look in the camera. But you want to know what, Cam?
What?
My success, fortunately, is not tied to my looks.
Yeah.
Because if it was, I'd be living in Section 8 housing.
Dang.
I know, that was a hard one.
That was.
Hard but true.
Man, not at all, man. I disagree with you.
Oh, thank you.
Yeah,
Thank
absolutely.
You.
Awesome. All right, well, let's get going, man. How important is the insurance company when we are implementing IBC? We get asked this often, Anthony. What are your initial thoughts here?
Overrated.
Why do you say that?
You know, we talk a lot about product versus process, right? And a lot of people put so much emphasis on the product and the insurance company.
Yeah. Right.
What insurance company are we using? What is the design? Now, don't get me wrong; those are important, but you know, we say it's that old 80-20.
Yeah.
Right. 80% of your results are going to be from 20% of the effort. And what I found in my experience, that 80-20 rule also applies to infinite banking, the results of IBC, and 20% is going to be the product. Yeah. Right? How does the insurance company doing? Are they increasing dividends? But 80% is going to be the impact of how you are incorporating infinite banking.
I couldn't agree more, and that was probably one of my biggest takeaways when I read Nelson Nash's book. Mm-hmm. If you go back to his book, right, which we've got one laying around here, but what I'm referring to is Nelson Nash's Becoming Your Own Banker. In this book, he lays out the strategy, and he answers a lot of these questions that people typically have. But what he does in here on page 54 is he highlights the way that somebody can use a policy. And what he's highlighting is the product versus the way that somebody's going to use it. And so on page 54, he shows an illustration where somebody just puts money into that policy over the years and does nothing with it. And at the end of it, what they end up with is at the age of 65, they have $1.5 million in cash value, and they're able to take $95,000 a year off in retirement. Mm-hmm. The next example that he illustrates is he says, okay, listen, what if we actually take control over our finances a little bit and put some of this money to work? And so the next example is he has somebody funding a policy, but he borrows against the cash value, and he has them finance one vehicle every 4 years. Mm-hmm. And at the end of age 65, the cash value has now increased from $1.5 million up to $1.9 million, and now that person's able to take out $225,000 of cash flow in retirement. And so what that highlights is, was it the insurance company that gave that person 150% return or 150% increase on their retirement income, Anthony?
It wasn't their dividends?
No. It wasn't the dividends, wasn't the interest rate, was none of that, right?
What was it?
Yeah, it was them. It was them taking control. And what Nelson does in the book is he just continues that example, right? And Nelson's great about kind of giving an example and then really beating it home. So he has maybe four or five more examples of what it looks like if you're to increase or expand that borrowing process. And great example. And so Nelson lays it out as for in the book is it is far more important what you're doing with the cash value than what insurance company you're using.
You know, Cam, I think I can say it a little different way that'll help you better understand.
Okay. So you got me. Yeah, let's hear this.
Okay, so hear me out here. Let's say you're about to have the night of your life. Okay, so we know what that means. Mm-hmm. Front row tickets to BTS concert. Okay, and we also know your hair is going to be on point.
Of course.
Right? Yeah. Okay, but the person who normally does your hair is nowhere to be found.
Oh no.
Okay, so you're in panic mode.
Yeah.
Right.
Yeah.
But you got two options.
Yeah.
Okay, one is you have your good buddy from college just started at Supercuts, right? But it's okay because you're going to give him your Paul Mitchell hair products. Okay, all right. Or you go to somebody else who's been like, this is their niche, preparing people for BTS concerts, right? They've been doing this for 12 years, right? And this is all they do. But this guy or girl is not a fan of Don't Mess with the Zohan, and thus refuses to use Paul Mitchell products. In fact, the only product they're going to use is going to be Sam's Choice. Ooh. Which is the Walmart brand hair product. So it's the night of your life, Cameron.
Yeah.
Who's going to get your hair on point?
Front row, BTS. I got to go with the person with the style, right? The one that's been doing it for 30 years.
Right. So how does this relate to infinite banking?
I don't think it does.
It does.
It doesn't.
I don't. Maybe it doesn't, but I'm having a good time, and I know Jacob, and I know there's quite a few guys and gals listen to are having a good time, or at least I hope so.
Yeah.
But to tie it back together, it's about product versus process, right? That product, where the hair product, that's your policy.
Yeah.
Right. It's important. Or you're gonna need some product in there, right? Because I was gonna say I was gonna say that I've seen your hair not done, but to be honest, I can't say that, right? Okay, but I'm sure it doesn't look that good, right? But you got the product in there. But the important thing is the process, right? It's not so much what they're putting in your hair, it's how they're cutting and how they're styling it. Just like with infinite banking, that product is a policy, but that process, that styling is how you're going to use that policy. Was that helpful, or was that just for my entertainment?
That was just your entertainment. I'm actually going to apologize to our listeners for that 5-minute tangent about my hair and Paul Mitchell and whatever it was, but I get what you're saying. I understand.
You get it? Okay.
I mean, you easily could have summed it up by saying, hey, do you want to use Tiger, if you're going to go play golf, do you want to use Tiger Woods golf clubs, or do you want to swing?
Everybody's heard that. Nobody's heard the BTS.
Yeah.
Okay, and you know what? There's one more point I missed on that.
Oh, boy.
Okay.
Great. There's even more.
Let's say that they're going to charge you the same.
Okay.
Right? And how that relates to infinite banking, right, is how important you're working with somebody who knows what they're doing. Not your buddy from college or your father-in-law or somebody who's in the insurance business. They have access to the same products an IBC guy does.
Yeah.
And there is no extra cost to use somebody who's IBC certified, or somebody who you have a relationship with, who might actually be hurt if you go somewhere else, right? So it's all about working with somebody who lives and breathes infinite banking.
Well said. I couldn't agree more with you. I also want to make a point.
Uh-oh.
Exactly.
What's that?
Is it's actually going to be on point, right? On the topic. And the point is that, right, what we're laying out here is that the emphasis is always on the process. Is how are we going to put the cash value to work? How are we going to build the returns and stuff? And we de-emphasize the product. But Anthony, I will tell you, you and I spend a lot of time when we're out there going and vetting the insurance companies and vetting the products that are available to us. And so, if I'm honest with you, man, we've spent a lot of time going out there and making sure that we know what is the best product that's out there. Mm-hmm. So even though we're de-emphasizing it in the relationship to what you guys do with the cash value, is we know and we're very familiar with the products that are available and which insurance companies are a really good fit for what we're trying to do here.
Exactly. Yeah. Well said.
Yeah.
And that was actually a little bit more on point than my story.
Yeah. Yeah. Just a touch.
Yeah.
Just a touch. Awesome. All right. What else we got here?
Well, then let's talk about process over product.
Okay.
Right? We still want the best product, but what does that mean?
What I would say that means is when you're vetting the product, right, and we're looking at the insurance companies, number one is there's several criteria that we want to look at, right? And we've covered those in the past. Just a few of them would be kind of the policy design, kind of the loan provisions, and what I would say in this circumstance would be the ways that somebody could fund a policy, right? And what I mean by that is not every insurance company is going to be a good fit for every person. So there's many insurance companies out there that you can go through. What we do is we vet those ones, and then we work with, some of the best ones that are out there. And depending on your situation, your circumstance, kind of depends on which one we recommend that you go with. What comes to mind is I had a gentleman that called in, swore he was uninsurable, but still wanted to do the process. And so what we were looking at is we started looking at his kids. We said, okay, listen, what do we want to do for the kids? And we looked at the type of funding that he wanted to do. And with a big lump sum on a juvenile, it was a better fit with insurance company A. Throughout the process, we also put him through underwriting, and we actually got an approval on him, surprisingly, right? And so what we did is we actually pivoted, and we went with placing the policy on him, which was a completely different insurance company based upon the funding and the premiums and that stuff. And so sometimes you end up with one family could have multiple policies at multiple carriers depending upon the situation.
Okay, Cam. Does the biggest insurance company provide the best insurance policy?
Good question. I am going to say they provide a good policy, but I would certainly say that they don't provide the best policy with what we're trying to accomplish, right? There are tangible things that you can measure when working with an insurance company, dividends, rates of increase, and those things, but there's also some intangibles, and sometimes the biggest insurance company is not the easiest to work with. So may have a decent performing policy, which is what you find in some of the biggest, largest mutual insurance companies out there, but let me tell you, they can be very difficult to work with. Yeah. Anthony, let me throw it back at you. What is, in your opinion, who do you think is the best company?
Well, I would say rarely is the biggest the best. And I wonder if that kind of, like, for example, does McDonald's make the best hamburger?
No.
And I'd probably argue that the biggest company rarely is the best of what they do. Right?
Do you know who makes the best hamburger? You don't know.
Your wife, I'm going to say.
Hudson's Burgers.
Oh.
Downtown Coeur d'Alene's been there since 1907.
Okay. All right.
Shout out Hudson's.
But what is the best company? I don't think there really is. I don't think there is one. Right? It depends what's best for the situation at hand, just like what you had talked about. And in my opinion, there's probably about 10 mutual companies that fit our criteria. Right? And simply, they need to be a mutual, which is knocking most people out. They need to be over 100 years or older. They need to pay dividends every one of those 100 years, which means they paid dividends during the Great Recession, the Great Depression, and the last time we've went through the pandemic of 1918.
Yeah.
Right? And then finally, they need to support the infinite banking concept. And just like you talked about, not only is there not just one company the best, but sometimes there's one company that's not the best for that situation, where they do need to break it up into a couple. And even some of the top companies, like the largest company, has a great product, but we don't work with them. And the reason being is they make all their agents, it's called captive, meaning you can only write with that insurance company, which in our view, we need to be independent, right? Because just like you said, the different insurance companies are going to be different. But if we go back to like product versus process, right? The product is overrated, as we just important, but overrated. But it's now the important question really should be not, what's the best company, but what's the best process, right? How are you going to find the best process? And I will say, at the end of the day, that's going to rely on the client. It's going to rely on you. No matter how good your agent is, if you're not taking their advice and executing, it doesn't matter, right? So you need to be working with a good agent. ideally somebody who lives and breathes infinite banking. But again, they're only going to take you so far. It's got to be up to you. You got to be able to take their process and their experience and advice and go ahead and put it into action. Bottom line is the agent will only take you so far. It's got to be up to you.
Well said. Well said.
I felt good. I felt like real serious when I said that.
You did say that, yeah.
I even pointed at the camera.
I know.
Right?
And actually, I was coming up with a joke while you're talking there.
Let's hear it.
Yeah. Well, you were framing the IBC agent as a coach, right?
Yeah.
Yeah. So if you were to look at, compare yourself to an NFL head coach, you'd be more like Hugh Jackson, which I think has got the worst head coach record in history.
For the Browns, yeah.
Yeah, exactly.
Okay, thanks, because that's going to instill a lot of confidence with these with the listeners here. Yeah, I want to talk to Anthony Hugh Jackson Faso.
That's okay. They can show up my calendar and talk to John Madden over here. So I think we'll be all right.
Belichick, but anyways.
Yeah. Anyways. Sorry, lots of tangents. Guys, hope you enjoyed this episode, and hopefully it was of value to you. Again, too much emphasis is going to be placed on the product, and what we need to focus on is the process. How are we going to implement? Who's going to help you get there?
Make it a fantastic day.
Take care.
Thanks for listening, and be sure to subscribe so you don't miss out on the next episode. Also, check out our website, infinitewealthconsultants.com, to find our podcast along with other additional resources.